Guy Spier, joining us from Zurich. He is an old friend, was I guess 1 year ahead of me at Harvard Business School. We didn't know each other there, but we've been great friends ever since. If you ever pass through Zurich, Guy is the most generous host ever. Don't worry, Guy, I'm not going to tell everybody on my email list to get your house is open for them. But Guy is a great friend, a great guy, a great investor, has built really a fabulous business that I'm a big fan of. He is also the author of The Education of a Value Investor, a book I highly recommend. You'll learn a lot from it, both as an investor, but more importantly, I think as a human being. You know, Guy is very honest, almost raw in telling his story and some of the mistakes he's made. Maybe it's something Glenn and I have adopted and when we teach as well. You know, just being super honest and about mistakes, you know, not just successes, which is all everybody ever talks about in this industry especially. I'm not just saying great things about the book because I have a couple little cameos in the book, pages 54 and 156 and 157, but who's counting? With that, Guy, I'm sure we're going to have plenty of questions from our students for you. I sent around, you know, some background, your bio and all, but you just want to tell a little bit of your story about, you know, introduce yourself about how you came to be in this business and, you know, what style of investing you practice, you know, any sort of general lessons, you know, maybe talk for 10 minutes or something like that, and then we can just do Q&A for the balance of our time.
Yeah, no problem, Whitney. The one thing that I'd like to do, if it's possible, either now or in between or at the end, is I'd love to hear from the participants. I think that it's easier to address comments if I know exactly what the participants are up to. And I don't know if have you already done that, Whitney?
Well, we as part of the this is our third of 9 sessions, 2.5-hour sessions. Okay. We've taken our 3-day Lessons from the Trenches Investing Bootcamp, broke it into the exact same content. We've broken into 9 sessions. So in our opening session, everyone went around and introduced themselves. Why don't we do this?
So Whitney, that's fine. So this is a bit like a forum. Just when you, so I'll do 10 minutes, but when you ask a question, just take a moment to say just 20 seconds about yourself. Does that sound good?
Yeah, that's exactly what we did with when Orlando Moishant joined us yesterday. So you'll get to meet some folks, but you know, it's an incredibly, you as a global citizen and someone who invests all over the world would absolutely love this group. You know, we've got people on right now from Romania, from Saudi Arabia, from Singapore, some real early birds from the West of the United States. We've got the power of this webinar. And the ability for people all over the world to log in and do a real-time classroom like this is really cool. It's a really great group of people.
Yeah. Okay. So
by the way, we have an HBS alum on the phone as one of the participants as well, fellow alum.
Not to stress anybody out or anything, but okay. So I'll just tell you what's on my mind. It may take less than 10 minutes, and then we'll see where the questions go. So. I just got back from my first trip to Russia. I'd never been to Russia before. We got some tickets to the World Cup semifinals and finals in St. Petersburg and Moscow. Now, I'm not a big soccer fan, and I wouldn't have gone just on account of my son being a soccer fan, but I was really curious to see this country that's being talked about so much. And there's some relevance to investing at the end. Oh, Dmitry, great to meet you. I see you from St. Petersburg. Let me just make sure the chat is up there. I loved St. Petersburg. I was blown away. I was expecting a place that was far less like the West than it actually is. And I was blown away by how comfortable I was, by how great the people were. You know, I'd read stories about Russia being full of drunks and unhappy people. Nothing could be further from the truth. I'd expected that communist era buildings would be like kind of like bad British construction. Instead, I found incredibly solid construction. I found that the trains worked on time, the fast train anyway, all sorts of great things. And then on the last night, I met up with somebody that I'd met previously, and we had a discussion of some politics. And I started reading a book about sort of what's been going on in Russia over the last 10 years. And I figured out that while I would love and be very happy to visit the place, I'm extremely unlikely to invest there, even though I've spent some time thinking about Sberbank. I think that and I don't really understand Russia very well, but so much of reality presents itself in many, many layers, and it takes a long time to get down to the core layers of a real sense of what's going on. And, you know, there's all these Russian dolls inside. So I don't know, just thoughts about Russia. I just thought I'd tell you. By contrast, so I think that there's something about truth in Russia, and it goes well before the current state of affairs. It goes to well before communism, back into the early history, that the truth, the underlying reality, doesn't reveal itself very quickly. It can take a very long time until the underlying truth reveals itself. By contrast, even in the United States, which I think is a society that's set up to get the truth out, the truth takes time to get out, but it gets out a lot faster. If one works hard, one can find the truth. I would argue that India is more like the United States, for example, than Russia. And so I've been working hard to find investable opportunities in India, which I do think is worth somebody like me, who's a outside minority investor, investing on a portfolio basis in other companies. But Dmitry, you might have something to say about that. So I actually got my India license not so long ago, and I've now, I did 2 trips to India so far this year. I'll probably do a couple more. And it's really exciting to go there and find things that are not Amazon.com. There are kind of like thousands of companies that are not even covered. So we can get into that if you like. And then I just have 2 more things to talk about. You know, I've been doing this for 20 years, but I would argue that my business, well, I would tell you that meeting Whitney Tilson was an enormous boost. When I met Whitney, I bumped into him at a cocktail party, and then he introduced me to everyone. It was quite incredible, and my learning curve went through the roof, and in some way, many aspects of my life really got started after I met Whitney, and he was extraordinary, and he is extraordinarily generous in all sorts of ways. But I think that there was a huge step for me when I implemented this zero management fee approach. And that happened now 10 years ago. And while not all of the money that I manage is zero management fee, I think that it's completely changed my relationship to my environment. And the interesting thing is I order all sorts of books on Amazon. This is what I randomly picked up today. It's got nothing to do with investing. But the guy talks about how the world of marketing has changed and how authenticity and giving rather than taking is the name of the game. And there are so many people in the process of building their businesses are busy taking in one way or another. So interruption advertising is a kind of taking. Even I would argue Amazon's got to be very careful with that strip along the top. That's a kind of an interruption. It's seeking to be useful to the user, but potentially could be viewed as an interruption. Whereas, giving strategies, for example, Amazon consistently pricing its products at a very low level, or finding better deals for people through Amazon Prime, are less well understood. And it goes for personal marketing as well, and marketing for a small business. And I found that so what started with zero management fee, in the most recent iteration, I figured out, our investors kept complaining to me that if they weren't based in the US, it was very expensive to custody aquamarine fund shares. So, for example, Swiss banks charge a fortune to just custody the shares. And what I figured out, and this is kind of like thinking of putting the customer first type of thinking, was that if I got myself a relationship with Charles Schwab as a registered investment advisor, I could actually bring all those aquamarine fund ownership into a Charles Schwab account where I was the registered investment advisor, and I could voluntarily choose to not charge them anything to do that. And I'd figured out that I could solve a problem for my investors much easier myself, even though it was a lot of work for us to do, than my investors could. And I think that that idea of constantly trying to think of how can I be relevant and valuable to not just my investors, but all sorts of other people in my ecosystem, it was only something that started 10 years ago. And just to give you a sense of the way I see myself as an investor is that I'm not trying to be smart. I think I'm smart enough, but I don't want to make money out of being smart. What I'm really trying to do is create an environment that every now and then I'll lunge for a stock, and because I've got the right stocks in front of me, I'll do okay. And that's proven to be the case so far, and it hasn't proven to be the case by a very large margin, but a sufficiently large margin that I can stay in business. What I would add to you is that if it wasn't for the zero management fee, I'm not sure how marketable my product would be, because it's something that people are willing to pay for based on historical returns, given that I don't charge them anything up front. But I'm not sure how many people would want to sign up for it if I was charging them 1.5 and 20 or something like that. So the last thought for you, and then I'll be quiet, I've probably gone over 10 minutes, is that I think that, so I've got a letter written by Nick Sleep, who's from 2010 that I've kept on my desk here, interestingly enough, and I made some notes, but he had a firm called Sleep Zachariah. He made so much money in 3 stocks, Amazon, Costco, and Berkshire Hathaway, that he shut down his fund. But the idea, and I'm sure that Whitney and Glenn maybe have talked about it, is that if, the minute I identify an investment opportunity as being a case of trying to predict, the wiggles, the what will happen in the next, 6 to 18 months, I kind of want to leave it alone and let other people use up valuable brain power. That's kind of like, what is it? The hare knows many things, the hedgehog knows one. And I'm just trying to find things where I'm very, very confident where 5 years out or 10 years out, something really good is going to happen, but we don't know exactly what path it will get there, what the path it will take to get there. And in general, people who are very focused on short-term hits will not value those long-term opportunities. And if I just stick around those, I'll do fine, even though most of the time people look at me and say that I'm a little bit stupid, or that I'm a little bit boring, or that I don't really know an awful lot. But it's worth saying that I'm combining that with really trying actually actively not to use my intelligence, because I think my intelligence could mislead me as much as it could lead me in the right direction. So I don't know.
Guy, this is Glenn. There's something we talked about the last couple of days that maybe you could touch on before we get into the Q&A, but it relates to what you just said, which is, to what degree the rise of computer trading and just artificial intelligence kind of overlaying itself on the investment world, and how the individual operators kind of, what are your advantages that can combat that sort of ever-growing intelligence out there?
So how long do you have, Glenn? No, so it's interesting you should ask that. So first of all, let's divide the kind of machine learning and application of computing power to the investment challenge into short-term and long-term. And there's no doubt in my mind that short-term, there's all sorts of arbitrages that you can get if you throw enough computing power at it, analyzing all sorts of Twitter feeds, Google searches, using satellite data, many, many different things that will allow you to predict some kind of short-term price movement in one way or another. And I'm very confident that that's true, and that's yet another reason not to try and compete against that in any way. But then if we go to, so here's the challenge. So I did a course on Coursera, or part of a course, on, I think it was artificial intelligence. I don't remember what the title of the course was. And it's amazing, even a schmuck like me who doesn't have particularly good mathematics learned quite a bit. And here was what absolutely tantalized me. The tantalizing idea was, why not take every single 10K, 10Q document that has ever been produced by a publicly traded company, make those correspond to, let's say, rolling 10-year returns in the underlying in the stock that it represents. So the output is subsequent 10-year returns in the stock. And then you have a whole bunch of data, which is every single thing of publicly available information that was produced before then, and you have an output which is IRR over the subsequent 10 years. And you feed all that into an artificial intelligence engine, some kind of neural network, and you tell it, go to work and find out what it is. And the idea with these neural networks is that we may not be able to explain what patterns it finds. And so I would just tell you my conclusion. I'm not going to take much more time over it. I had some conversations, so I've gotten to know some friends at Google. I had some conversations with them about it, about how one would put that together. And here's the thing. So there is an infinite amount of computing that one could do. And even with the growth in computing power, there's not an infinite amount of computing power. And what I learned on the Coursera course is that one of the key limitations to using artificial intelligence is, one, the size of the data set. You need a large enough data set. And second, computing power. You need enough computing power. So there are many AI problems that cannot be solved today and may never be solved because of one of those two constraints. And it's absolutely fascinating, and forgive me because I could go on for a lot longer. So just simply checking the properties of a 1,000-person network. So you take a Facebook network of only 1,000 people and you want to bilaterally check every single person in that network against every single other one. It turns out that that simple problem requires more computing power than exists in the universe because it's such an exponential problem. It's sort of like 1,000 factorial, which is just an enormous number. And so there are many, many artificial intelligence problems that you just don't have the computing power to solve. Even if we had that computing power, if we look at Waymo and other self-driving companies, the key thing that they're looking for is the size of the data set. They need as much driving data as they can possibly get, and they just don't have enough of it. And so I believe that the amount of data that the companies that are investable produce is just not enough. Even if we had the computing power, which is questionable, the data, there are not enough data out there to really train an AI system properly. So I believe all of that is a long way of saying that human intelligence rather than machine intelligence, human intelligence being the kind of thing that we all do, will still have a role to play. So sorry, it's a slightly longer answer to a question that I've been asking myself, but that's, maybe that's some kind of article to write up. I think there is space for us in the world and on the planet, if you like. Is that helpful?
Tremendously interesting topic.
Yeah.
We have a question from Dmitry. So go ahead, introduce yourself briefly.
Hello, Dmitry, originally from St. Petersburg, Russia, lived in Finland for 12 years, then 4 years in France, again Finland, now moved to Romania a couple of years ago. Background M&A, a lot of finance, and read your book, really liked it, watched most of the videos you could find on you on YouTube, so well aware. And just wondering, you're now in your office room and then the reading room is somewhere there.
Yeah.
My question was mostly about you being in Europe and how is it affecting you being in Switzerland in terms of your clientele? Do you get mostly Europeans versus US clients? Also, I saw that your IOM just grew, doubled basically from when I started following you. You had about 80, 90 million. Now it's 200.
Yeah, 250 or so, I think.
250. Okay, wow.
I think, I don't know, I think if I would have stayed in the US, I may well have been done better than here. I don't think that it was as easy for me to gain new clients being here in Zurich. But fuck it, excuse my language. You have to live your life, not based, Sergio Marconi died today, and he spent the last 15 years turning around Fiat Chrysler, and somebody wrote to me and said, oh my God, he's not going to enjoy the fruits of his labor. It's just yet another reminder that we have to go home every day being really pleased with what we did that day, because we may not live to see another day. So my choice to move to Zurich was a personal life choice. And, I was beyond the point where I needed to think about how much money I was making. I had enough to feed my family and myself. And so I wanted to live in Zurich. I don't know, we can't do the hypothetical. I would say that, Whitney and Glenn will enjoy this. I look around the world right now, I see the UK falling apart, not falling apart, but it's just in turmoil over Brexit. I look at the debates, political debates going on in the United States, and Zurich's a really nice vantage point from which to observe all of that, because nothing's changing here. It's the same as it was 20 years ago in all relevant aspects: legal system, political system, economic system, and the place works, and it's really nice to be in a place that works. Just one other thing for you, Dmitry, is that there's a lot that's changed for me since I wrote that book. And if I liked writing, I'd write some kind of update, but I don't like writing very much, so I don't think that's going to happen. So, what I figured out is that aspects of the physical environment that one works in certainly is relevant, but far more relevant are the human relationships that we have. Who are we hanging out with? Less important that the library is the other end of this office is, who do I see day to day? Who do I talk to day to day? It's that will exert a much larger influence than the actual physical environment. So I think in the book, I kind of obsess about that just a little more than is necessary. And I think that it's possible if I'd have focused on that, I would have been less against New York City as a place to operate. I think you can operate very well as a value investor in New York City or other big city. It's just that you have to focus on the relationships and make sure you don't get into bad set of relationships.
And your relationships, sorry, the follow-up question, is mostly like European or US? Because in Europe, the pockets of value investors are Spain, they have quite a big network, Switzerland a bit, I guess. And then what else we have?
So my network is very US centric, because I've spent more time in the United States than anywhere else in my life. I also happen to think that the United States is by far and away the best place to invest in and to have one's economic life centered on. So I don't know what proportion of my net worth is US centric, but it's probably well over 50%. It's just that the way the world's unfolded is that you don't have to physically locate yourself where that center is. I think if I'd spent more time in Europe, I'd have more of a European network. But at the end of the day, it's who am I speaking to on the phone every day or two or three, more than who's in my physical proximity. And maybe I'm unusual in that way. The funny thing is, my wife makes friends really well, and I end up making friends with my wife's friends. But the people that I talk to about investing are spread across the planet. They're kind of, the conversations are location independent. So, there's a fantastic investor who's just down the road from me called Rob Vinnell. I wish I spent
RV Capital.
Yeah,
I wish letters.
I need to go visit him actually, and he's down the road, and I haven't done it. Why? Because I'm not here all that often. I'm here, even though Zurich's my base, I'm here maybe 8 months in the year or 7 months in the year, and I haven't visited him. And so I don't think the location is all that important. And funnily enough, at the time that I moved here, I had this budding friendship with Monish Pabrai, and I told him I was moving to Zurich, and I was concerned that moving from the east coast of the US to Switzerland might change the nature of the relationship. And he kind of said, you know what, he didn't think it would change the nature of the relationship at all, and I don't think that it has. And, he's based in California, but has got, last time I heard him talk about it, he said that he had zero in terms of his net worth or his funds investments in the United States. Everything was in India or elsewhere. So, it's a global civilization now, and my physical location. It's also interesting, Sergio Marconi he was, you know, his headquarters. So the headquarters of Fiat Chrysler were in London, Turin, and Michigan. But his family lived in Geneva, or close to Geneva, or live in Geneva. And when he needed this operation, he came to a hospital in Zurich. You know, so yeah.
We have a question from Chirag. Go ahead.
Hi. Thanks, guys. It's a real treat to have you here. I've read your book and big fan of both you and Monish. So I hear you have a great coffee machine. The last YouTube video I saw. So that was.
I love my coffee machine.
Yeah.
I can take, actually, if Whitney lets me, I can put this. I can put the call onto a Zoom on my iPhone, and I can move around a little bit, if you like.
Yeah, but you know, my question is related to, you know, you mentioned India, and I know that you have become more active investing in India, and I had two-part question. One was, you mentioned that you don't worry about, you know, the short-term price movements, but look at kind of a more growth or general terms out 2 years, 3 years ahead. And I'm wondering, how do you stumble upon these ideas in a relatively foreign geography like India to you? And my second part of the question is, I know you have a checklist that you keep updating. And I'm wondering that since you started investing in India, are there things that you added related to the Indian equity market, or just investing in a developing market like India that may be helpful for us?
So yeah, sure. You know, the decision in India was to look at sort of you know, sub-billion US dollar market cap companies, and even sub $500 million market cap companies, and they divide into sort of, in equal numbers, equal thirds, approximately 3 different kinds. There's the outright frauds, which is about 1/3, and then there is the you know, just either unusually highly valued and or not such a great business, and then the last third are all sorts of unusual and interesting opportunities that exist. You know, and just to give the group one example of this, and Whitney and Glenn, you may enjoy hearing about this, is that, you know, there is I've forgotten the name of the agency, believe it or not, but so India has been in desperate need of better housing for a very long time. And the way new constructions happened was through developers who was a very badly regulated sector with all sorts of frauds and ripping off of customers when new housing developments were created. And the Indians went and looked around the world and figured out that the model that they wanted to use, Whitney and Glenn, has got nothing to do with any of the economies that we're familiar with. They looked in Dubai, and they found that Dubai had a housing authority which works very, very similar to the SEC in the United States, in that they outlawed any property development that is not registered with this housing agency. And the developers are required to file all sorts of filings, the same as publicly traded companies file with the SEC, forcing disclosure on a whole bunch of issues and creating a lot more certainty. Now, what that's done is it's forced a whole bunch of housing developers out of the market, but it's left some housing developers with an extraordinary set of opportunities. What am I trying to say? That is something I'd never heard of, an agency like that. You know, the United States doesn't have an agency like that, nor does anywhere in Western Europe. India is developing models which don't necessarily borrow entirely from the West, which create some extraordinary business opportunities. There are some housing developers that are extraordinary in terms of the investment opportunity. So great stuff to do. In terms of how to go about it, I think that following on from my short conversation with Glenn, or maybe not so short, on artificial intelligence, yes, RERA, thank you so much. That's exactly what I was referring to. Real Estate Regulatory Agency, very, very simple. and there, it's phenomenal because RERA, you know, India, one of the things that people have around India is that, you know, it's a country whose corruption levels are certainly going to go down over the next 50 years, but they're still way higher than they ought to be, hence the attempts through demonetization to change things. But the thing about RERA is that it's very hard to game that system because the information gets uploaded by IT and gets made available for everyone to see. So it's spectacularly well thought out. And in a solution to a developing world problem that didn't come from Western Europe and North America. And so, you know, really interesting. So in terms of sourcing these ideas, here's where I'm coming out on right now, is that I enjoy doing stock screens. It's really a lot of fun. I like playing with numbers. I'm maybe slightly geeky. But I really think that, you know, this concept that, I don't know, Whitney and Glenn, you can probably know better than me, the idea that an idea screens well. So there are many ideas that will pop up on some well-constructed stock screen where actually what makes it a value trap or what makes it a horribly uninvestable company is not available in the numbers and may not even be available in the publicly available documents. And by the way, what we have in India is that, you know, 10Ks are a dream to read in comparison to the Indian documents, where at least they file stuff, but so much of what they file and so much of what's written, even in the business description, is so sort of like outdated and irrelevant. So the way I'm approaching it is by developing my, you know, if that's machine intelligence, then human intelligence is really working hard to develop relationships with people who can help me get insight. So paying a lot of attention to smart investors, paying attention to the relationships that I have. And I mean, there's a guy that I met 20 years ago called Girish Baku, who's been investing in India in the last 20 years. The ability to pick up the phone or to have a conversation with him is extremely valuable. And, you know, all I need is 2 or 3 ideas. So I just started, and I'm in the happy situation that every single thing that I've done in India so far has been enormously profitable because I only did one. And that was a credit rating agency about a decade ago, and it was extremely profitable. In terms of checklist items, I have not updated this checklist specifically for India. I think that what I do know is that I am extremely liable to make more. I'm more likely to make mistakes in India because of assumptions that I'll make that turn out not to be true. So, you know, I have to tread carefully. What that means for me, I think, is staying in areas. I mean, it's the Tom Watson thing, staying in areas that I think I can understand. I think that you know, I don't right now, but I might end up re-owning a couple of the credit rating agencies in India because it's something I understand very well. But who knows? I'll probably come a cropper in 1 or 2. We'll see how it goes, and we'll see how much of the portfolio I invest in it. It's not more than 5% right now. I can't imagine going more than 25%. But thanks for the question, Chirag.
All right, we have a question from Dean. Let's see. Dean, do you have a video or? Oh, there you go.
Yes. Can you see me now?
Yeah, go ahead.
Perfect.
Yo.
Great. So I am currently a consultant at McKinsey & Company. I graduated from Columbia with my MBA 3 years ago. Prior to that, I owned and operated a number of Subway franchises. And prior to that, I was graduated from NYU in finance and economics. What's interesting is I think my best investment to date has been in a number of Anthony Robbins courses, and I know that you're probably one of a few, or only a handful of people I've heard in my professional career actually reference his kind of events and materials. And I think for me, one thing I've struggled with as I think about my career and think about next steps is, for me, it's really important to live kind of a well-balanced life, to spend a lot of time with my family and friends, and to try to live, especially as you mentioned the news about Sergio Marchionne dying at 66, you know, here I am stocking away money in my 401k and retirement plans that you can't even touch till you're 65 in the US. So how do you, in this industry, one of the biggest challenges, and I'm not even a professional in the industry yet, is thinking about how you manage your time, both from an investment perspective, now that you're looking at opportunities across the world, but also from kind of a personal perspective and how you think about the boundaries you draw, the framework you have for, this is work time, this is family time. And I'd love to hear your personal thoughts on how you think about those things, especially in light of the fact that I know that you've been through the same or similar experiences that focus on kind of having a wheel in your life that focuses on health, family, and all the things that kind of make a fulfilling life.
So, so Anthony Robbins, thanks for bringing him up. The hilarious thing is that when Jason Zweig did an interview with me for the book review that he wrote, he kind of goes, he's like, Anthony Robbins, like, really? Anthony Robbins gets so many people sort of just thinking, isn't that just so tacky? Could he really teach you anything?
It's a cult guy.
What's that?
Exactly.
It's a cult.
And my answer is yeah, it's freaking tacky, but Whitney, you met me after I think I'd done Tony Robbins, but I was this stuck-up Englishman with like all these carrots stuck up my rear end. I needed somebody to shake me out of that, and you might have done it, but I got
and he failed.
Believe me, Whitney, if you think it's bad now, you should have seen it before. I was, and it's funny, Dean, because I'd come from a consulting background, and a combination of consulting background and various universities. I really did think that the world owed me a living, and I really did think I was just stuck in this loop of sort of thinking, well, I have all these credentials, and I'm God's gift to mankind, and why the fuck isn't it working for me? And I really needed Anthony Robbins and jumping up and down in a room to get me out of that. So I agree very strongly with you on that. In terms of work-life balance, I'll just tell you something. I have a weekly conference call with the small team that I work with, which happens on a Monday. So I was actually visiting my parents yesterday, and so something came up. It was like somebody said, he's on holiday. And I said, wait a second, aren't I supposed to be on holiday? I'm supposed to be with my parents. What am I doing on this conference call? To which a member of my team responded and said, Guy, you're always on fucking holiday. What is your problem? And, what is it? Do what you love, and then you'll never have to work another day of your life again. I don't think I'm particularly good at it. But what I found works well for me, and Whitney will be surprised because I've had real trouble staying fit and keeping a weight that I would like to be at. But I get up every morning and do some form of exercise of one kind or another, which I really enjoy. And then I roll into the office at like 10:30, 11. And then I try to get home for dinner with my family at 7 p.m. is kind of like the way I structure my day. I don't know that I have much more to say about it than it's a decision at some point. I mean, Monish Pabrai, he says, you want to live in the United States because there poor people are fat. Try going to India where poor people are really skinny because they don't have enough to eat. At some point, don't we just have to say, wow, I actually have enough? And it's not about working hard. It's about enjoying what I have and constructing a day that I like and with people that I like to do it with, and then allow whatever success or not comes with that to come, but not to worry about knocking the lights out. I had this fascinating conversation a long time ago, Whitney and Glenn, with Ariel. It was when the Wesco meetings were still happening with Charlie Munger. And Ariel, I don't remember exactly what it was, but Ariel said, Guy, you can't do that. I mean, how will you become the best investor on the planet if you do that? And my answer was, I'm not trying to become the best investor on the planet. I'm trying to be the best version of myself. I don't know if that helps, but I think that at some point, I'll give you just one other short story. And this is, so I arrive in Zurich and I get a request from some family office in Athens. They say, we want to invest like minimum $5 million, potentially $20 million with you, but we need you to come and do a presentation for us in Athens. Athens is like an hour and a half, maybe less, 1 hour flight away from here. And, you know, it was tantalizing for me. And I got the courage to tell them, you know what, I have an annual partnership meeting. You're welcome to come and visit me there. You're also welcome to come to the office and we can have a coffee. But I don't travel for people who are not investors of mine. Simple as that. I have enough. So that took, and you know, I had to gulp 3 times, and there are many times I didn't do that. But that's a kind of a quality of life decision. It's a decision to say, you know what, I don't care that you might invest $20 million with me. I'm not getting onto a spurious flight to Athens just for the sake of the potential of that happening. And I think, so the quality of life comes from 1,000 small decisions like that, where you kind of slowly create time. And I have to say that I don't think I'm all that good at it. And that's partly why I try to do the exercise in the morning. I think that what really helps me is actually my wife, who is very, very hard to negotiate away. So what she wants, she usually gets. And she is extremely family focused. So I would not want to be doing as much travel as I'm doing this summer. But you know, she insists. The reason why I'm here for a day, we just got back from visiting my parents in France, and now my family are off to the United States. I get an extra day to be in the office, basically. So I don't know if that's helpful.
Great. Thank you, Guy. By the way, did that Greek investor end up investing with you? And if not, do you think they would have if you'd gone to Athens?
No. Sorry, there was some music that started playing on my computer there. I don't think I believe, and I don't know how many of you are building investment businesses, I believe that the vast majority, you know, when you set your shingle out and say, hey, here I am, I'm ready to take money, you get a lot of crazies coming at you, and you have to weed out the crazies. And some of the crazies, they just have all sorts of psychological reasons for why they want to engage with you. And there's a very small proportion. The ones who actually decide to invest are extraordinarily quiet. They don't make a big noise. Some of them come in without actually even talking to me. And so, no, I don't think they would have invested either. So,
yeah. Guy, we've run a little past our time, so we'll need to wrap it up. I don't think I've had a chance to tell you, but, you know, maybe if the group is interested, I actually partly at your recommendation and the things you've told me, I am doing a Tony Robbins thing in 3 weeks in Las Vegas. It's not his usual, you know, whatever it is, discovering your inner self, but rather it's called Business Mastery. I think he does 3 of them a year. It's 5 days, starting on August 15th. And I'm doing it partly because, and look, it's costing me the better part of 10 grand by the time you factor in airfare and hotel. And I'm taking a substantial investment of time and money, you know, in part because of, you know, great things I've heard from people I respect like you, but also partly because what we're trying to build here at Kase Learning has some similarities to what Tony Robbins has built. And I'll tell you, just being part of the sales process as a customer has given me a bunch of ideas for how to price and you know, how to market to get people to sign up. You know, he's charging $9,000 or more for a 5-day program. That's sort of in line with what we're charging for our programs. So you know, how do you market a very high-end information / you know, touchy-feely, inspirational kind of program, you know, and get people to make big investments in it. So I'm hoping to learn some of that as well.
I would tell you, Whitney, so it's great. I'm glad that you're open to it. There's actually some aspects of your personality, Whitney, that are very similar to Tony Robbins. You know, this sort of like irrepressible enthusiasm for life, I think, is a Tony Robbins trait.
Yes.
It kind of rubs off.
And having an opinion on everything, however ill-informed or not.
Actually, you know, he's got this sort of like quiet, wise side to himself. That he goes off to somewhere, I don't remember where, in the South Pacific, and meditates for like 1 month a year or 2 months a year. But the other thing, I mean, I haven't done the business mastery thing. I did a seminar 20 years ago or so that was cost $700, and I think some people got in for free. But I would just tell the skeptics, you know, to see, and this is not sort of play acting, to see somebody who's an overweight, extremely overweight, middle-aged female who's worked as some account receivable person for much of her life, do the seminar and get the courage to quit her job because she knows that it's a dead end and it's not going to get her where she wants to go in life is something, I mean, it's brought tears to my eyes. It's extremely inspiring. I think that often, you know, those of us who are in this room are in an extraordinarily privileged place and we're already fine-tuning. But some of the people in those seminars, he's really, really helping people in dead-end worlds get something that's not dead-end. Think of this. Mark Benioff is a client of Tony Robbins. And Mark Benioff, who's the CEO of Salesforce, says that he would not have built the business he'd built if he'd not been in a relationship with Tony Robbins. So, you know, and he's not the, and I have a couple of friends who feel the same way about their businesses, not as well known as Mark Benioff. But I'm glad you're doing that. And I wish I could go with you, Whitney.
Yeah, he does one in Amsterdam as well, I think in June. I couldn't make that one. And then he does one in Florida in January. Those are sort of the three he does. So I'll take good notes and tell you about it. And to all the students on this call, see what I learned.
Here's the one thought that I really, you know, I didn't make it clear enough, but I really think it may be the most valuable thing that I share with you is that I think that all of us, whether we're personally investing or investing as a business, building a business, you know, Warren Buffett there's some story about a manager who spoke to him, and what Warren said was, don't worry about your short-term earnings, just keep building the moat. And if you build the moat, then good things will happen. And I just think there are so many actions that we can do to build our moat, to build the environment in which we're operating in. And I think that, you know, those things, many of those things have lasting value and will pay dividends way down the road, whereas wasting brain cells thinking about, you know, what Trump's supposed tariffs are going to do to trade and therefore to XYZ sector is an insight that may be 3 weeks long. And it may be better, you know, actually, Whitney, something that in one of your emails came through, and this will be the last thing I say, that really struck me, and I agree with it, was, you know, be more available to your clients and take their calls. I have realized that one of the most significant assets that I have is my clients. And when I take the time to what I realized is I don't have to call them up and convince them to invest more money with me or any of those things. Just call them up or make myself available to them and show them that I care about them and that I'm interested in them as people I think is perhaps the most valuable thing I can do. People don't care how much you know until they know how much you care. And there we go. I'll be quiet. Yeah. Thank you. Thank you, Whitney, for giving me the opportunity to meet all of you. You're welcome to write to me. Whitney can give you my email. I'll do my best to respond. Just don't expect a response right away. I'll be really happy to meet you some occasion or other.
Okay, Guy, thank you so much for joining us. Great, heartfelt, genuine insights and knowledge and so forth. So enjoy. I know you're going off on a family trip, I guess, tomorrow, so I'm glad you're able to squeeze us into your calendar. We're all very grateful you were able to join us. Hope to see you soon.
I and Charlie Munger say goodbye.
All righty. Take care. We're going to end the meeting now, and I'll see everybody tomorrow morning. Take care.